Investors, Greg Gallagher here, and it's time to look at our gap and go trade on the SQQQ from yesterday. First of all, just a reminder, we're up 94.8% year to date, so we're a little bit over 5%, and we've doubled our working capital or our investing capital this year. So it's time for you YouTube viewers to share and subscribe. Better yet, sign up for and get updates like this, videos like this every day for just $20 a month on Patreon. Just copy that into your browser. Okay, let's get right to it. Okay, here is the SQQQ, what I call the gap and go trade from the 28th. That was yesterday. And we use the MACD with the slow moving average is 6, the 20, and the histogram is 10. Right off the bat, you can see that the histogram is positive, and we knew that from the futures. I don't show the futures on here. This is just a 2-day look at it. But it gapped up. So because it didn't go lower than its low, we got in at 23.10 on this first bar right here. And then it just went up and up and up and up. And when it goes up like this, we use this red line here, which is the 20-period simple moving average. And this is a 5-minute chart, by the way, folks, just so you know. So we use that as our stop out guide, and we got stopped out, one of these bars here. So we got in at 23.10. We sold at 24.08 for a gain of 98 cents a share. We buy usually round lots of 1,000 or so shares. So on our $100,000 portfolio, we made model portfolio, we made $980. Okay, another important thing to take from this chart is you see this blue line, that's the 6-period moving average, okay, is going up and down, and the red line's going sideways. Because of that, we didn't take any more trades in the afternoon, and we didn't go long, even though the market is in correction. I'm going to show you that here in a minute, or a second here. We didn't go long because for us to go long, we would like to see this view right here towards the end of the day where the activity is above the red line. And then that indicates to me that we got a shot of this pullback or correction continuing into the next day. So if we look at what's the market doing right now, am I crazy? No, I'm not. Really, I'm not. This doesn't show the actual, but the futures this morning are mixed. In spite of a 33% GDP print, they were expecting like 31 or 32%, which was better than expected. And some positive news. The market's mixed. The Dow is down, the Nasdaq is up a little, and the S&P, when I did this video, was flat. Okay. The purpose of this chart, though, is to show you, this is a year-to-date chart of the S&P as represented by the SPY, and that's what we trade. Okay, you can see we got this uptrend channel going here, and we broke that trend here. We broke it, then we reacquired it, and we broke it again. Now here we are. We're at a really critical point here, folks. This blue dotted line here goes back, and it kind of looks at that top, and that gap down, and that top. So we've got a lot of things hitting, and again, here we broke below. So I'm saying that is 326 basically, and we're right there. We closed at 326.66. Okay, so that indicates to me if we blow through this, and especially if we go down below this bottom, which is around 320 here, because this dotted line right here is the 100-day simple moving average, okay? And it's just the I put those up as a guide. The 100-day is the closest to this. I mean, we use the 50-day, we use the 100-day, we use the 200-day, we use the 250-day. We can use whatever day you want. But it's just showing you that this convergence of data here is right here. So this pattern, while it's not technically a real head and shoulders, I mean, that looks like a head, that looks like a shoulder, this looks like a shoulder there. A break below here, and it's lookout below. I mean, we could go anywhere, technically speaking. And down here is the relative strength index, and you can see by it's fading. Okay, now when it's below 30 and it lives below it like it did here, then we'll be looking for the market to reverse. But it's not below 30. And I expect to get a bounce from here. I expect to go back up and test this 35 to 40 area. That would be all normal. And if it does, we may go long. We may take some long positions just to make money, because we're traders, not investors. And that's why it's fun and it's rewarding to be a G3 investor. So sign up today. Greg Gallagher with G3 Investors. Good trading.